So, can one single stock really be a supercharged bet on the future of money? Today, we're going to break down an incredibly bold thesis that some analysts believe could lead to a 10x return, all by betting on Bitcoin through one very specific company, MicroStrategy. Okay, let's get right into it.
It all kicks off with this one, kind of crazy numbers, $1,750. That is the price target for a single share of MicroStrategy, or MSTR, that's been getting a lot of buzz. I mean, it sounds almost unbelievable, right? A massive leap from where the stock has been.
Right, so you're probably thinking, how on earth is that even possible? Well, this isn't just some random number pulled out of a hat. It's actually the final piece of a much bigger puzzle, a thesis that starts with a prediction for Bitcoin that is, frankly, even more mind-blowing.
To get the MicroStrategy target, you've got to first wrap your head around the forecast that holds this whole thing up. It's a prediction about Bitcoin's future that basically changes the entire game. And this isn't just some random guess, It's coming from Brian Armstrong, the CEO of Coinbase, who's on record saying he believes we'll see $1 million Bitcoin by 2030. This is absolutely critical. It's the foundational assumption for the entire MicroStrategy thesis we're about to unpack.
But hold on, $1 million Bitcoin? What could possibly get it there? Well, according to the sources we're looking at, this has nothing to do with hype. It's all about two massive, systemic shifts in the global economy that could completely rewrite the rules of finance as we know them.
Okay, so the first big driver, it's this idea of sovereign demand. The thesis hangs on the U.S. government creating a strategic Bitcoin reserve. Now, just think about that domino effect for a second. If the U.S., the issuer of the world's reserve currency, starts stacking Bitcoin, well, every other major country is pretty much forced to follow suit. The second driver is an even bigger idea. A total change in how we think about money itself.
In this chart, man, it lays it out perfectly. On the left, you've got the world we've been living in, the old model. A system where governments just keep spending and printing more money, which, slowly eats away at your savings. The prediction here is that we're shifting to the new model on the right, a world that values things with built-in, unchangeable scarcity, like Bitcoin, as an escape from that endless inflation.
All right, so if the whole big picture idea is a global shift to Bitcoin, you might be thinking, why not just buy Bitcoin? And that is the million-dollar question, isn't it? Why is MicroStrategy, a software company of all things, seen as the ultimate way to play this?
Well, it boils down to two main things. First, it's just plain easier. For huge institutions, buying a regular stock like MSTR is simple. Buying actual Bitcoin can be a regulatory nightmare for them. But the real magic, the secret sauce here, is the financial engineering. MicroStrategy is constantly borrowing money specifically to buy even more Bitcoin. It's basically a leveraged bet on its price.
And this whole strategy creates something that people are calling the Saylor premium, named after the company's chairman, Michael Saylor. It's the extra value the market is willing to pay for MSTR stock because it gives them that leveraged exposure to Bitcoin, all wrapped up in a nice, convenient, publicly traded package.
So what this all means is that MicroStrategy isn't just riding shotgun with Bitcoin. No, it's designed to be a rocket booster strapped to its back. Because of that leverage, the stock has the potential to seriously amplify Bitcoin's gains when things are going up.
Okay, so we've got the big why, the global shift, and we've got the what, the MicroStrategy vehicle. Now let's get into the how. How do we actually get to that crazy number, 1750? The math is actually surprisingly simple. Let's just walk through it real quick. Step 1, you figure out the multiplier for Bitcoin. You take that $1 million target and divide it by the price when this analysis was done, which was around 87 grand. That gives you a multiplier of 11.41. Step 2, you find a solid technical support level for MSTR stock, which the source puts at $153 and change. And finally, step 3, you just multiply them together.
And boom, that little bit of math gets you to 1748 and change, which, rounds up nicely to our base case target of 1750. But remember, this is the conservative take. This assumes MSTR only moves in perfect lockstep with Bitcoin.
But what about that accelerator we were talking about, that Saylor premium? This is where it gets really interesting. If you assume that big institutions are willing to pay just a 1.5 times premium for that leveraged, easy-to-access exposure, well, the bull case price target suddenly jumps to over $2,600 a share. Wow.
Okay, so that's the big long-term picture. But the analysis we're digging into also points out this really fascinating short-term drama. This idea that before any of this happens, Wall Street is setting a classic bear trap to shake out all the weak hands.
So, according to this theory, the trap was set in two moves. First, you get this little calculated dip in Bitcoin to flush out all the panicked retail traders. Then, once Bitcoin found its footing, the focus turned to MSTR. On December 23rd, the stock got pushed down hard, landing, what do you know, exactly on that crucial $153 support level we just used in our math.
But how can you tell this was a setup and not just, a real sell-off? The key piece of evidence, according to the source, is this thing called stopping volume. Picture this. The price is falling, 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 and then bam, it hits a brick wall on a gigantic spike in trading. It's the classic sign that some huge hidden buyer, a whale, is sitting there just soaking up every single share that panicked sellers are throwing at them.
And it wasn't just that one volume spike. The analysis points to a bunch of other hidden clues that all pointed towards a big reversal. You had money flow indicators showing that even as the price dropped, the big money was actually buying. You had momentum indicators screaming that the sellers were totally exhausted. All these technical signs pointed to one thing: that sharp drop created a price vacuum that was just begging to snap back up.
So what you end up with is this incredible collision, right? You've got this massive, decade-long macroeconomic thesis crashing right into this tactical, short-term bear trap that Wall Street supposedly set up. And it really just leaves you with the ultimate question. In this high-stakes game of financial chicken, who blinks first?